Okay, we're recording this video on Saturday, the 27th of April 2024, just gone 7:37 p.m. Chicago time. Do hope you are doing well, and I hope you're having a good weekend. We're in the middle of packing because our time in Kauai is up. Going to be traveling over the next few days back to Australia, which will be fun. Had a good trip here. It's been wet though this year, and that's just part of the cycles. I think it was a La Nina cycle as opposed to an El Nino cycle, and that's why we got so much rain this year. But anyway, these things happen. The waves were good, the winds were offshore. And we're not going to do the usual Emini charts first. We're going to change it up a little bit because I've got a question from Steve about pullbacks and end of trends to define what that actually is, and need to talk about the Japanese yen because something systemic is happening there. We got the Japanese yen just collapsing under its own weight. It's all the quantitative easing, and we just need to look at that chart because something's going to happen. Something's going to break in the markets soon-ish. Anyway, so let's talk about pullback to end of trends very briefly. This is a chart of Apple, daily chart of Apple, and we've got the better sine wave indicator on here. The plate of spaghetti beneath the price bars is the calculations of the cycles themselves in three different time frames. The low time frame has the thinnest lines, the highest time frame has the thickest lines, and then we've got an intermediate time frame in the middle there. So I'm just going to show that because that's the calculations going on, and then when we see these crosses, we're looking for price confirmation to put in support and resistance, but we're going to just disable that for the time being and just show you this. So here we have a whole bunch of pullback to end of trends happening. This is Apple on a daily chart. Talked about this a couple of weekends ago, doing a video at 200. Was it any wonder that we topped out at 200? Because cyclically, a whole bunch of things, a lot of trend patterns just ran out of steam. You can see here pullback to end of trend on the lowest time frame, pullback to end of trend on the intermediate time frame, syncing up resistance with the highest time frame, and we get a nice little sign of weakness up here after these things have all run themselves out. And then since then, at break of 190, that was an important signal that there was going to be weakness in Apple. I was talking about the rotation out of all of these winners into some less glamorous names, broker-dealers, high dividend playing stocks, maybe some of the industrial metals type stuff, and there's going to be a rotation happening out of the names that everybody has been familiar with over the last couple of years that have been making a lot of money for people, and all of a sudden they're going to be looking into their brokerage accounts on the weekend and thinking, I should have got out at 200. Anyway, pullback to end of trend, what does it mean? It is a cyclical support that happens after a breakout into a trend, and then it ends with an end of trend cycle, which is the next cyclical pattern after that. So what we had here on this lowest time frame, well, let's talk about the intermediate one because it's a little bit clearer here. We found support down at the bottom, a cyclical support on the intermediate time frame, and then we had cyclical resistance on the intermediate time frame here. We break above that into an uptrend. The bars turn red, showing that we're in strength at that point, and we're running with this strength, and there's no cyclical resistance or support in the way until we run out of puff here and we have what I call a little pullback. So it's a little counter trend move. We've been moving strongly in this uptrend. We have a little bit of a counter trend move, and the end of trend will finish up with that final little flurry of cyclical activity, support to resistance. So this is the next support level that comes in after the breakout level, and the definite, well, I'm even pointing to the wrong point. I should be pointing to here because we're talking about the intermediate time frame. So intermediate, we break out, we have a counter trend move from here up the highs, bang, and it's caught by support on the intermediate time frame here, and then we run to end of trend. The definition of this line is it has to be above the breakout level. That puts it at a pullback level. If we just pull back below this, it would just be a regular support level. But it's because we broke out, and it shows the market has so much strength behind it that it's kept on going, and the next level that we have a support level is above the breakout level, and that's what defines a trend. Is the pullback level is greater than this breakout level, and then we end up with an end of trend. Next one down, you can have these small little patterns. Here's the lowest time frame. We broke out into a trending move. We had a little bit of a counter trend move, put in a pullback support, and it ran to end of trend. But the market was so strong, we kept on pushing up through that resistance, and it was resistance on the intermediate time frame, bang. And then we put in here this little pullback. We're above the breakout level on the lowest time frame here, and it puts in a little cyclical flurry at the end on that lowest time frame there. So that's what's going on. We can see them on the other side, the flip side. So we break below support on the lowest time frame. We have a little pullback level there, which is a bit obfuscated, but there it is, bang, and then there's the end of trend. The pullback level, the next resistance that we have, is below the support level that we broke through. So it's just the opposite rules when we're moving in the opposite direction. So that's how we count a pullback to end of trend. It's a refinement on the original Hilbert sine wave, or the sine wave code that John Ehlers was generous enough to show the public. It just shows a full trending move from the breakout level to this end here. And all it means is at that point, we are likely to have a little bit of resistance, whether it's the absolute end of the trend. In this case, no, we kept on pushing through. We need some confirmation of a counter trend move after something like that. And this move, this trending move, is inside a larger trending move that also needed to play out with pullback to end of trend on the intermediate time frame there. So there we go, a little discussion, explanation of pullback to end of trend moves. Let us talk about the Japanese yen on the daily charts, because this is what is going on. Insane what is happening to the Japanese yen. Just down, down, down. We're at 63. Now this is the Japanese yen futures. So this is versus the US dollar. A lot of people quote the US dollar versus the Japanese yen, which is the inverse of this. I don't find that very helpful, because here you're actually seeing the weakness in the Japanese yen. The chart is pointing down and the Japanese yen is weak, instead of looking at a USD Japanese yen chart, which would be screaming upwards, and that would show strength in the US dollar and weakness in the Japanese yen. It's a lot easier just to look at the Japanese yen futures chart with @JY. So let's look at some trending patterns here, and you can see here on the daily chart when we broke below parity with the US dollar here back 2021, April 2021, 3 years ago. This thing just broke into a downtrend. We had all these signs of weakness up here at the highs, bang, 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 was a couple of end of trend patterns up here. This marks big things happen at triple. So this is the first time that we see triple support coming in at that point. I'm sure at those highs we also had a triple. There we go. So this is a big things happen at triples on the upside. So we're maxing out with the first time that we see resistance on all three time frames. And remember, when you see this pattern, one of two things is going to happen. It is either going to break into a trending move or bounce into a reversal move. So here it's a bounce because we spend some time rolling over. Sometimes we just bounce at that resistance on the highest level and just trade down all the way. But this one we had to spend a little bit of time working out that trending energy with the end of trend patterns going off here. Bang, bang, bang. We roll over. The next triple, big things happen at triples, come in. So this is either going to be a support level where we're going to bounce, or it's going to be a level that we're going to break through into a trending move. We have a weak little bounce there with a sign of strength, and then as soon as that gives way, bang, we're into a big trending move here on the daily chart. So that was down at parity. We're down at 63 at the moment. You can see on the way down here, none of these levels are catching. The first little area of potential sign of strength was at 80 here when we had these red bars, and then they just turned around. As soon as we broke through there, we never looked back. But let me just pull up this on a weekly chart, and we'll go 5,000 bars back. Again, Japanese yen, here we go, all the way back to 2010. So this entire move has been declining since 150 Japanese yen. There's our sign of weakness up here at the highs with these little end of trends going off, one there and one there, and then we break into this big downtrending move. So we've had a few legs of this. The first leg was a strong move down from 150 to parity, and then we mess around here around this 110 level to parity, and then we finally give way into this next trending move. And moves like this in foreign currency are not good. This is turning parabolic. This is something is going to break, and it's going to cause some intervention by central banks, governments around the world. Some people are talking about another Plaza Accord type arrangement and so on, but this is serious. And I think what's driving it, it's always difficult to say, but this is money flowing out of the Japanese financial system. And I think because the borrowing rates in Japan are so low, and in the US and the Western economies, you've got higher interest rates being set by the central banks. That differential between the zero rate in Japan versus the 4.5% rate with the Fed, where you can get 5+ in the money markets and so on, that differential has gotten wider over the last year and a half as the Fed has been raising rates to so-called fight inflation. But because you get that bigger differential, the money's being raised, been loaned out of Japanese yen, Remember, the Japanese are big savers, so there's a big pool of reserves there. You go to the Japanese, you borrow in Japanese yen, and you buy US assets or debt instruments and earn that spread. Also leverage it up if you can, earn that spread, and you've got both the positive carry, which is the differential of the interest rate that you're paying in Japan versus you're receiving in the US, and you've got the weakening currencies. So you've got those two things going towards you. So it's a super attractive trade and is no doubt going to be getting very crowded. But we're just cracking through these supports. Now, is there anything that we can see in terms of the volume patterns or the professional bars? Because we're going so far back in time, we don't have back history to make decent calculations on volume. This is why these patterns have shown up here, but those are big pro bars, which means pretty high professional trade size, exceptionally high average trade size. This is really big professional money coming in here at the highs, shorting it and then shorting it here. We never looked back from those levels, and we're not seeing anything like that yet. So on the downside here, yes, we have exhaustion, sell patterns and bullish divergence come in. But if you look at the blue professional bars, these came in and we had a little bit of a bounce from there. But these were on the way down. This was on the retrace. They weren't coming in here at the lows. Those blue professional bars weren't buying the lows. Even with this week's activity, we're down at 63 and a bit, and no blue professional bars have come in here. So this is a real collapse. What's going to stop us if this career's out of control? So on a macro level, this is super fascinating, interesting, but it could cause some intervention by the central banks in order to stop at some point. This is destabilizing for the markets. I don't know. And what do? How do you stop it? You maybe lower interest rates in the developed economies all at once by 25, 50 basis points in order to correct that imbalance between the zero effectively or 25 basis point interest rate in Japan versus those developed economies. You narrow that spread and all of a sudden people start to panic out of this trade, and you'll cause a reversal of the Japanese yen because the money will flood back in to the Japanese yen. So we could have a severe bounce in the Japanese yen, but it would take some concerted central bank, possibly government intervention, that's happening. And I suppose we'd be signaled at some point because the central bankers would get together. Do they do this on Zoom and decide to do something over a weekend? And all of a sudden the first thing the market knows about it is on Sunday night? I don't know. But it's interesting, it's fascinating, it's a chart worth watching. So if we start to see fireworks in this Japanese yen chart, no doubt it'll ripple through a whole bunch of other markets as well. So something worth bearing in mind. Okay, there we go. Those are my two alternate type charts. Let us get to the E-mini because it's the weekend and it's time to do a weekend futures market recap. We'll go through 15 of the largest futures markets and I'll show you what I'm seeing on my charts. And we had a little bit of a bounce this week. Kind of said we might after last weekend's video, but there's time for another reversion in this downtrend, and we'll show you on the lower charts what that looks like. So yes, we had a little bit of a bounce this week because the exhaustion patterns have got a bit oversold here, negative 5 million on the daily chart. We had all these amateur up bars up here. Nothing though in terms of trailing this stop on the way down. And I said I'm waiting for blue professional bars or some exhaustion pattern, something to step in, or amateur down bars, something to stop this move, something to trail this up. We've broken through support on the lowest time frame, and these lines now on the intermediate time frame have started to turn down and come together. So this week's going to be exciting. I think we're going to come down and find that support area, and it might be a little bit hairy on the way down. So let's watch for that. 135-minute chart. We're in a confirmed downtrend on this chart. The background's in gray, and this is what we put in. We bounced from here on the lowest time frame up to a pullback resistance level on that lowest time frame. Bang. So this is good. Once we've broken through support and support, we have to go pull back to end of trends. Just like we had a pullback to end of trend up here at the highs, we've got to go see a pullback to end of trend at least on that lowest time frame. And so that's the cross that's come in here on beta sine wave, and we bounced up positive 49. No blue professional up bars up here, but we just need some confirmation on the lower time frames. If we start breaking down, through 5100s here, this will be playing out to pull back to end of trend on that 135-minute chart here. 45-minute chart, again, the background's in gray. You can see even with this pretty volatile activity, the trending system kept us good. In terms of the combo trend, which is in terms of price and volume, we're in an uptrend, and then we started to break into a downtrend, confirmed downtrend when the background turns into grey and both volume and price trending down. And so we didn't have a nice exhaustion pattern down here. You can see the better momentum volume patterns down here just slowly creeping back up to the zero line, and that's when we started to come back here. And we've had a little bit of retracement, nice little pullback to end of trend on this lowest time frame where we bounce back. Now here's what I'm looking for here, because what we've got going on the 45-minute chart is two time frames coming together. So we've got our resistance on the lowest time frame there, and we've got a cross happening on the intermediate time frame. I think the next time frame up, that level's come in possibly. We'll check that in a second. Those are both coming together. So we've got resistance on two time frames coming together right here, and that's good. So two time frames, when they lock in together, it means the energy doubles, and that gets us more certainty that we've got a turn happening there. Not very interesting in terms of blue professional bars or amateur up bars or anything like that on this chart, but those two time frames, that's what I'm looking for. Those two things come together to force us down. And the 15-minute chart here, no, it's not signaled here. So that intermediate time frame here on the 45-minute chart, you go down a time frame and it becomes the highest time frame on this chart here. And you can see here, this is what I'm looking at. These thicker lines coming together. So we've got all of these thick lines, the highest time frame and the intermediate time frame on the 15-minute chart. They're all coming together here. A little bit of strength here, the background's in red that we've had, but here we've got an exhaustion buy pattern. We never had on the 15-minute chart an exhaustion sell pattern down here. We did on the tick bar chart, I'll show you that, but we did not on the 15-minute chart, and that's why we bounced up. And we got blue professional bars come in here towards those highs, and the stop's still a ways away on better pro-am, but let's wait and see if we get blue professional bars. Once all of that comes together. Now, we don't have confirmation yet. This hasn't turned into the background's in grey. We haven't broken into a downtrend. The bars are still red. We've not broken a support here, so it's not happened yet, but that's what I'm looking for. We've got an exhaustion pattern here. Potentially we've got to see a bearish divergence pattern coming in there, but this has got the cyclical makings of the right turning point in order to go check the bottom at 5,000 and go find all the blue professional bars, go see the exhaustion pattern on the downside, go get that kind of extreme activity. And I don't know, did I see on Friday that there were some naval ships that got hit by the Houthis or something like that? I'm surprised that didn't turn into a bigger story. Is something happening again? Who knows? Is it going to be just a technical pattern where we roll over at this point and that's all we need? Or does it come with some more fundamental news that drives it down and people get worried? But it's testing back into 5,000. For me, this is going to be the move for the beginning part of this week as we play this out, this resistance on this time frame. And then the tick bar chart, this is the exhaustion pattern that we did get midweek. So the solid yellow vertical lines are the beginnings and the ends of the week. And I said this Rambo pattern is really important. It's a marker in the market that we had last week. This was the strike from Israel into Iran that petered out into a little bit of a nothing burger. But it is a level that's important. So people have on their charts this level, and they might be looking at that as a target for on the way down. The 5,000 is clearly an important number, but maybe they run a little bit harder into this number, who knows. So we didn't bounce off an exhaustion pattern down here. We effectively bounced off that Rambo pattern. Blue professional bars did come in, and the beginning of the last week we broke into an uptrend on the 13,500 tip bar chart. Background's in red. So in terms of price and volume, we're in an uptrend. Nice little stair-step trade here. So it's the first blue professional bar on the retrace here after we break out above the trailing stop on better pro-am. The professional stepped in there. You can see that little blue, or couple of blue professional bars. Bang. Stair-step trade because we stair-step the trailing stop up in this direction. Exhaustion by bearish divergence, we roll over and the amateurs are leading the way, amateur down bars here, and we run into exhaustion sell. It's not a Rambo pattern at the lows. That would have been beautiful, but it wasn't. It just ended up with an exhaustion sell at that point. We rallied from there and confirmed uptrend. But at the end of this week, we've got the blue professional bars coming in. We've trailed the stop up on the 13,500 tip bar chart. So a break of that would break us into a downtrend here. And again, I've lost my little markers. That's so annoying with TradeStation here. There should be a little check marker or a little box just like this where we can reduce that down. But oh, there we go. It's back. Sometimes these little fiddly things happen, but 13,500 on better sine wave here, and we're running into cyclical resistance on the highest time frame. We've got these crossing here, so we've got support to resistance at that point. So we had a nice little uptrend, broke into a downtrend, found support, broke into an uptrend up here. So we need to see these bars turn white and a break of this support level and the background to turn grey to get a confirmed downtrend on that 13,500 tip bar chart. And then we'll go test 5,000, I would have thought. So that's my guess as to what's going to happen on the E-mini this week. So there we go, E-mini charts done. Can we get through the others? Is there much to talk to these? Yes, I think so, because I think the euro is heading down. I'm short euro this week. I was short on Thursday, and it turned out to be a nice little trade Thursday into Friday. So here we go, a whole bunch of blue professional bars. Now remember, this is the new set of better indicators that's coming out very, very, very shortly. And it shows us big pros. So this is blue professional bars with a background in blue showing this is ultra high average trade size. So this is picking up activity from the next highest time frame. So if you see that, blue professional bars are always significant, but when you see the background in blue as well, that means they're significant even on the next highest time frame. So that's super important. So that's the big pros happening here. So we bounced down here at 6 off Rambo Patterns exhaustion sell. There wasn't a whole bunch of blue professional bars ever at the bottom. It's down here. This was just a complex retracement, bang, 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 just up and up and up. Finally came up to 7 3/4. Up here, exhaustion sell, bullish divergence. Big pros come in and we start breaking into a downtrend. I know there's a whole bunch of blue professional bars kind of coming at the end of the day on Friday, but my guess is that's going to continue down. So we need the lows of that sequence. So 107, this level down here, 696, 107, super important. That needs to break for a continuation here. And you can see some of these signals start to come together. So what I'm looking for is when all 4 time frames have these signals coming together. So we got sign of weakness on better pro-am here, confirmed. So that's the 500 tip bar chart, and then the next time frame up, the 1500 up here, bang. That's the same point. And big things happen at triples, so we're looking for signs of weakness after that. This one didn't go anywhere. This one didn't go anywhere. This one seems like it's got legs. Same thing here. Big things happen at triples, and there's a sign of weakness, and we break into a downtrend. So all around that point, Friday, beginning of Friday, we had these patterns happening together, syncing up with these patterns on the next highest time frame. So all 4 views of the market, 2 time frames, 2 price and volume ways of looking at the market, all suggesting that we've topped out and we're heading down. So I'm short euro and hoping that rips. British pound, Aussie dollar, same type things. Japanese yen we have talked about. 10 years, so 10 years are in an uptrend at the moment. Backgrounds in red, backgrounds in red. Here's the big pro bars. They stepped in at 107 here. And similarly at this low we have sign of strength, sign of strength, sign of strength, sign of strength, all happening down there. All we're doing at the moment is a little bit of a retrace, and it's a stair-step trade. Break out into an uptrend, no blue professional bars, they come on this little retrace, bang, we stair step it up, so we're looking for this levels, pull back in an uptrend support here, so looking for that to hold, and so we could have a break up in 10-year notes, which will be a flight to safety or lower rates. I don't know, if that Japanese yen picture starts to get serious, maybe we run towards the 10-year notes. I don't know. You'd have thought I don't know. It's difficult to say how you'd react. The Japanese yen would go up, and so the US dollar would go down versus the Japanese yen. It's complicated. That's why I just like looking at the charts, like understanding the flows and trying to put in some economic global macro mental picture. It's fun, but I'm not very good at it, and it's super complicated. Much rather just say, look, all the information's in the chart. Just follow the professionals. What are the professionals doing on the chart? And just follow them. Get in, get out. That's the way to trade, rather than have a view of the global macro picture, a definitive view, because It's tough. Anyway, gold took a dive this week. We topped out over here on gold, and we're finding a little bit of a pattern here. Thing with gold and silver up here at these highs on the daily chart. Let me just pull these up on the daily chart, gold and silver. We have some super high average trade sizes going on. Look at this, all these big pro bars. This is silver up at 30, all these big pro bars. And everybody's like saying, oh, gold and silver going to the moon. Same thing, big pro bars coming in at 2400 up here. So I'm not convinced that this is going to go a lot higher than it currently has. I think we're going to test into those highs, and maybe we could go for a little bit of a slam to the downside. We're showing counter trend signals here. We got signs of weakness on the lower time frame, sign of strength in the higher. We're undecided on gold, silver. A lot of signs of strength here on this chart and on this chart, but sign of weakness here and here. So we've not decided which way we're breaking. Bitcoin, what's Bitcoin doing this weekend? Sold off initially on Friday night, and we're rallying back to 64. So it's not convincing, but here you can see the big pro bars here at this point here, just selling it down, bang at those highs. There's sign of weakness, sign of weakness, sign of weakness, sign of weakness, all happening at the same time. And we broke down big pro bars, selling it down. And usually at the lows on Bitcoin here, we see big pro bars stepping in, and they're not stepped in yet. These are amateur up bars, so it's weak buying happening at the moment. So I think we're going to continue down on Bitcoin. Ethereum, don't usually touch that on the weekend video. Crude, now Crude's got a little bit of a, it's not a proper stair-step trade here, but we've got some strength going on the lowest time frame here, strength here. We're breaking up through this level. So again, if there's some fundamental news that comes out, it might strengthen a little bit there. We'll see. We've come back into the breakout level here at 83.50. So we've come back in. Blue professional bars have stepped in at that point. So that'd be interesting to see if crude keeps on rallying. Natural gas got slammed this week. Here's this exhaustion buy. Big pro bars come in here, got slammed to the downside, and they've not come back in at the lows. So that's not over. Copper had a beautiful little run up to 460, and they took profits up here. You can see big pro bars, 460, and we weakened from there. So copper's in the middle of just rolling over and having a little bit of weakness, but I don't think it's all over for copper, because there's a good story, global story on copper. Corn, all the ags were doing well this week, and that could be the real play. Here, corn, soybeans, wheat. Yeah, look at wheat. The whole week has been a strong uptrend, up at 630, just continuing up and up and up. Backgrounds in red. Maybe some profit taking happening here at the highs going on at the moment, but that was a nice little trade that set off this week. Anyway, I've rattled on long enough. I do hope you're doing well. Hoping to get a video out next weekend. As I said, we're going to be back in Sydney for a couple of days, so hopefully we've got some time to do a video. And as usual, when I'm traveling, there's going to be exciting moves happening in the markets. It happens without fail. So good luck with your trading this week, and I'll talk to you next weekend.